Hey, my name's James Nicholson and welcome to my YouTube channel. Now in this video I want to talk about what's next for the property market in 2023. 2022 was a crazy year in the property market. We had some absolute ups and some absolute downs. At the beginning of the year, house prices just rocketed forward. It was absolutely crazy. But by the end of the year, those properties had started to lose value. In fact, we had multiple consecutive months of back-to-back drops in property. So do join us in this video and find out what I think is the future of property in 2023. While you're here, do give me a quick like on the video. Do subscribe to the channel, guys, and hit the bell. We're currently building a portfolio for my two kids, Georgia, who's 22, Emily, who's 2, and that is going to be shown on this channel. So if you subscribe and hit the bell, you can already see some of the other videos we've made of the first 2 deals that we've done for them so far last year. So look, what happened in the last 2 or 3 years was absolutely insane. Now, when the pandemic hit, I assumed, and a lot of other people did, that the market would just crash. It just made sense. We were all locked up at home. Obviously, transactions at that point had to slow down as it was very hard to do property viewings, and people were fearful for their jobs, for their businesses and stuff like that. Now, we got through that somehow, and people looked and they actually became slightly better off temporarily because they had the furlough scheme. They weren't spending money down the pub. They weren't spending money on holidays. So they were cash rich temporarily. A lot of businesses got something called a bounce back loan, which gave them more cash. Some businesses that I know, they might have had £5,000 profit in a year. Now they had 50 grand sitting in the bank. And trust me, they were going to spend it. And so that meant that prices of stuff went crazy. And house prices for 2 consecutive years, 2020, 21 and 22, really went through the roof at a very, very fast rate. Now, inflation was a result of the government printing so much money, the war in Ukraine with the energy crisis. There was tons of things that were happening. We couldn't get goods from China. And so things became that bit more expensive. In fact, it was a lot more. It got up to 11% more expensive. And that really then meant the Bank of England had to trigger interest rate rises. You see, if they want to reduce inflation, what they normally do is rise the interest rate higher than the actual inflation figure, and that will quash it very quickly and push those rates down. Now, you're not going to be able to do that, or they weren't able to go from nearly 0% to 12%, but they did start rising rates, and that's starting to have an impact on property prices at the end of 2022. Now, we're in 2023, we're talking January right now. What do we think is going to happen this year? And what impact does that have on us as property investors? Well, interest rates are going to rise. And so they were expected to go to 4.5% as a base rate. But now it's been revised down that figure to 4.25 as a base rate. So that's good. Positive that it's not going to possibly go as high, but no one knows for sure. Until that inflation starts coming down, it could go up to 6-7%. We need to start seeing that. Now, inflation figures came out the other day. It's now down to 10.5 from around 10.7, I think. Still really high, isn't it? And so we need to get that inflation down to 5% at least this year by the back end of the year, I think, to make people just be more comfortable, stop talking about it and get on with stuff. So that's important as well. Now, house prices, I think the drop in house prices is going to take longer than people think. We were seeing some back-to-back drops, and we will still see some drops early this year, I'm certain. But I think any bigger drops will be pushed back. And the reason for that is the sellers aren't quite ready yet to take those offers, to take those lower offers at the moment. And we see that because the Rightmove data just showed that house prices have actually gone up, the asking prices. Very clear on that, because I made a video on that and there's a little confusion. I'm saying the asking prices, or Rightmove is saying asking prices went up, right? Which is fine. But what that shows is that those people aren't desperate to sell. If you're desperate to sell and you've got a 100 grand house, you'll put it on for 90. You're not going to put it on for 105 if you're desperate to sell. And the fact that people aren't desperate to sell means that it's going to take longer until they are. So what will change things? Well, these interest rate rises will change stuff because affordability will drop for certain buyers, but not as much as you think. And the reason for that is that the rate rises. The banks have already priced in this 4.25% base rate. That's already in their figures. And so in December and January this year, we actually saw some mortgage products reduce their rate of interest that they were offering, reducing it, which is crazy, right? And that's because they need to get deal flow. It's very important for banks to get deal flow because they make a ton of money by doing deals because they charge you fees. They're charging you interest. So if we don't borrow and they don't get new deals, it makes it tough for them to make money. And suddenly there's going to be a ton of jobs lost in those sectors. So they're trying to get the market stimulated again. Another thing that's really good is the mortgage guarantee scheme. And so that is helping first-time buyers. It means that you only need a 5% deposit. The government will back that lending to the bank. So if there is a problem with you for whatever reason, or if there's a collapse in the market, they are bailed out. And so that means that they're more confident to lend. In 2008, the biggest problem we had was banks wouldn't lend. The government's addressed that here, at least for first-time buyers. And that's a good thing. So I think the market's going to drop 8% in this financial year. I think a lot of that will be at the back end of the year. But as an investor, should that worry you? I don't think so, because I think you can learn how to find below market value deals. There are going to be some people that need to sell. They just need to sell, particularly landlords at the moment, because there's initial landlords that they bought in their personal name many years ago, and now the tax is really high on these deals. And so they're not making very, very good profit on their portfolio like they would hope. And so if you can find landlords that are distressed, that aren't owning their properties in a limited company, they own it in their personal name, they'll be looking to sell right now. And that could be good opportunity. And if you can find a landlord that owns a house that needs some renovation work, that's what you need to be looking for. So you need to be looking for deals where you can add value. So how can you add value? Well, I have a few deals last year where I added value. I took a studio flat, I turned it into a 1-bedroom property. That's adding value. I took a 1-bedroom property and turned it into a 2-bedroom property. That added value. In each case, it added around £50,000 in value to that property, which is crazy good. Very, very good deal there. I took a house in Doncaster, which I bought for my eldest daughter, Georgia, and we added value by refurbishing it. You can actually see that video on this channel. All those deals, actually, you can see how we've done that on the channel. So do go and check out the older videos, guys. And so adding value is important. Now, you need to keep the costs down on that, and you just need to make it better than it is. So if you can find a deal that you can add value and buy below market value, right? So there's people out there, go and check out my videos on something called Section 24. Landlords that own in their personal name are taxed so high now that it might not be worth them being a landlord anymore, and they're looking to get out of the market. You can then buy in a company, because they can't just transfer it to the company. They need someone to buy it, and it could be themselves, but the tax is so high on that. You can buy from them, and then you can run it through a limited company, and then it's tax efficient and will work very well for you as an investment going forward. So that's a big opportunity as well. And if you can buy a property that's below market value by 10% or 20%, which there are tons in auctions at the moment, I'm seeing properties that are 25 to 30% below market value. Last year, they were selling in auctions for market value, right? Imagine that. A 100 grand house was selling in an auction for 100 grand, the same as you could get it for an estate agent. There wasn't really an incentive to buy for the auction, because if you did it through the agent, you would have that time. When you go at an auction, it's a bit more speed is the most important thing. You've got to get it done in 30 days. And now, because there is less mortgages out there because mortgages stopped lending for a month or so like in the autumn last year. That means that there's lots of opportunities out there. So I want you to go out there and look for below market value deals. We're going to help you guys do that on this channel. So do subscribe. We're also going to give you some training on that. So in the description is going to be a link where you can get educated and learn how to do this yourself. Do subscribe to the channel, hit the bell. Check out all my other content on the channel, including this video right here.